All right. Good morning, good evening, good afternoon. Can everyone hear me? How's everyone doing here? We got 308 people in the room and counting. Okay, we got some. Looks like we got half of you guys are MPA students. The other half seems to be very, very new. Good to see that. Michael McGee, my birthday today. Oh, happy birthday! Happy birthday! I just got this drink from one of my students from South Africa. You should come on down to Bangkok and let's have a drink together. I feel like an alcoholic. I'm always drinking in front of you guys. Okay, Naveen Lee, welcome, welcome. Okay. Oh, you don't drink? Okay, good. I need to hang out with you more then. Happy birthday, happy birthday. Okay. All right, all right. So today we're going to be going over stop losses. Now, how many of you guys have issues with stop losses? Yeah, it's a very, very big thing of stop loss. Now, I don't really bring up stop loss so easily because stop loss is one of those things that it's not really so basic, but it's actually an advanced topic. Okay, so we're gonna go over this now. Before we continue, where is everybody from? While I get this stuff started here, let me hear it. Where are you all from? Malaysia, London, India. Whoa, okay, Brunei, Dubai, Georgia, Belgium, Madrid, Philippines, Singapore, Guangzhou, Bulgaria, Turkey, Macedonia. Wow, it's all over the place. Okay, UK, Chicago, Uganda, Bangkok. Oh, great, great. Toronto, Earth. Okay, well, welcome. My name is Naveen Prithyani. I'm going to be your host tonight, and we're going to be going over the topic of stop loss. And while we waste time, let's go straight into it. Chris Sayers, since there's 300 of us, we should start a Forex Spartan army. Yeah, that's great. It's great. No, there's no video. I'm just getting the charts and everything set up for you guys. Yeah, can everyone see my screen? I'm going to draw a circle on the screen. Let me know when you see it. Bingo. Bingo. Okay. So I want to ask you guys a question. Some of you guys' answers might get drained into all these chat messages, but I want you guys, those of you who are not typing, just think about it. Obviously, those who do type, good. The more interaction, the better. The faster you're gonna learn. Those who are feeling shy to type, it's okay. Just think about what I'm about to ask you guys going forward for the next hour. Now, blank screen, nothing on the screen. Let me try it again. Okay. Now it should be okay. I'm going to draw a circle again. Okay, good. All right. Okay, those of you who cannot see it, you'll have to probably log out and log back in. You should be okay, and there's still some time to log in without the room being packed. Okay, so let's take a look at a couple of things. First things I want to ask you guys is, when it comes to stop losses, what's the process? What's the process of stop loss? I generally do not talk about stop losses because it's an advanced topic. But I keep getting emails saying, "Hey Naveen, what's the best place to put a stop loss?" I wish I can, just answer inside this little one sentence and say, "That's it. That's your answer." But I can't. Okay, so let's understand it. So what does stop loss to you guys mean? What is the word stop loss mean to you guys? Risk management, looking for a bridge, cut losses, nightmare, okay. Safety, my maximum risk on a trade when the market turns, cutoff point, my ready loss, not wanted. Okay, so you can see a lot of it is referring to the word risk. Now I want you guys to understand one thing. Is risk based on market or is it based psychological? Is risk coming from who you are or is what the market is? Okay? The reality is risk is personal. It has everything to do with your own personality. Okay? Now let me ask you guys one question. If there is a trade, I tell you there's a nice trade right here, for example, you're gonna buy it here, but your stop loss needs to be here, and your take profits right here. So you're doing a buy, take profit right here, and stop loss below you. Is that good or bad? Okay. Now here's the thing. The reason why I say psychological is because everyone's going for this word that risk to reward is critical. And yes, it is critical. But let me ask you guys one thing. Let's go with everything in the world. When you buy a restaurant, are you looking to turn 100% profit or 200% profit in 1 week? In 1 year? In 2 years? No. Next thing, real estate. When you buy a property, 100% profit in 1 week? Okay. All right. Next thing, when you buy a product, okay, let's go. You say you go buy an iPhone and then you want to sell it on Google, or you want to sell it on Amazon. You're gonna get 100% on whatever you bought it for. Okay. Right. So the only thing that we're forcing ourselves on is trading. And trading is the only way where we're like, well, we're putting money there, so it better turn a lot of profit. Okay. A lot of profit, okay, which is high reward, doesn't necessarily come from high risk. Not necessarily. A high reward comes from higher education. It's a better understanding of what you're involved in, whether it's trading or anything. It's what you're involved in. If you do not have a higher understanding of that, then you're doing high reward and extremely high risk. Does that make sense? Okay. Now, stop losses also are a piece of what we call timing. How many of you guys have issues with timing? Like, well, when am I supposed to get in the trade? God damn it, every time I buy, it's too early. Sometimes I buy, it's too late. When do I bloody get in? This is a common question. In fact, I opened up a poll earlier from you guys, and, I think a good 60% of that is timing. Well, timing is like a meter gauge. It's like this. You enter too early, you're going to get spiked out. You enter too late, you need a wide stop loss. Okay? Timing requires a balance in between, which gets you the right stop loss. Yeah, not after the precision lesson. Yeah. I mean, those of you guys who are doing timing in the 4CB, how many of you guys are actually here that are in the 4CB course? Yeah, this is recorded. Okay. How many of you guys are actually in the timing part of the course? Okay. Imagine I gave you that timing course right now in the beginning without even going through any of the other thing prior that I trained you with. It's not going to be possible, right? You guys going to be like, I don't know what he's talking about. You have, because to reach the area of timing, you must understand every process of throughout it. And we'll get into what is the 4CB and all that stuff later. Not now. Right now we're focusing on stop losses, right? So if I tell you like, okay, the markets are here as a support and resistance, and markets are coming down, and we're like, yeah, man, I can see it. I'm going to hit the buy right there. Stop loss just below my recent low. That stopped me out. Okay, so since I'm stopped out, if I enter later, let's say I'm like, oh, I can see it's finally going. I enter there. Oh, that stopped me out. But I was right. It was going up in a buy because I can see it here. How many of this is happening to you guys? You see this little range of too early, deadly, too late, deadly. Right? Yeah, so this is something you want to keep track of, and it doesn't have to be with you know, is my stop loss wrong? Maybe my stop loss is wrong. It has nothing to do with stop loss and has everything to do with time. How you're entering the market and when you're entering the market. Okay? So let's understand a couple things. Okay, those of you guys who have a black screen, I'm not sure why it's doing that. It seems to be fine. We have 3 computers running here. It's okay here. And is everyone's screen okay on your end? Okay, for those of you who cannot see the screen, try to exit and re-enter. Maybe that will fix it. I'm not sure why that's happening. Sorry about that. Okay, let's give it a second while they jump right back in. Oh, that's a lot of them. Okay. Sorry for late. I was in class. Yeah, that's okay. Welcome. Okay. Don't worry, it's still recorded. Sound is okay for everybody? Is it choppy? Is sound okay? Audio is okay? Yeah? Okay, good. All right, so let's keep going. It's recorded regardless. So, you know, we want to, it's a lot of stuff to cover and we don't have time to sit around and tell stories and all that stuff. Let's keep going. All right? Let's go. Okay. All right, so here. Okay, I'm gonna draw a circle again. Circle visible. Perfect. Okay, so first things first is understanding the logic of where you enter. Okay, I want you guys to be honest with me right now. If I say you have to do a buy trade, and there is a stop loss here. Okay, how many of you guys are looking at the stop loss in terms of pips? Okay, we got a few me's there. Okay, how many of you guys are looking at the stop loss in terms of, well, how much am I gonna lose? They're going straight for the money. Okay, and how many of you guys are looking at it like, okay, well, how many, you know, what's my stop loss against my take profit? Okay, do you see stop loss can be attacked with different areas? This, money management. It can be attacked with many processes, but you can see all of this is at some point psychological. The first level, the one that's you're going for the pip number. Okay, I'm gonna go for 20 pips every single time. 20 pips, 30 pips, that's it. That's my stop loss, baby. Okay, you're going that because that threshold tells you that should be sufficient. Should be. Psychological. The one that goes dollar amount. Well, okay, I can risk $1,000. No more than that. Okay, that's your threshold. Psychological. It has nothing to do with the markets. This one. Well, if I'm going to put my take profit here, right there, you know, outside my screen, then it makes sense to put my stop loss here. You know, then I got like a 45 risk to reward. Like, you know, okay, also psychological. It's like, does it have any logic to it? Is there any reasons why that's there? You know what I mean? So another issue there. Okay, everyone still hear me? Everything just fine? So far so good? Yeah? Okay. And then there comes the money management, which is the one that says, am I willing to lose this amount? Okay, I want to give you guys a little hack today. I want to give you guys a little hack today. Okay, the hack today is this. Okay, when you trade, isn't the answer yes, you're going to trade? It's just a matter of when. Right? Does everyone agree? Like, you know you're going to trade. Like, there is no doubt about it. You're going to trade. You need to get that in your mind. You're going to trade. Now, the only thing that you need to worry about is, how much am I going to lose? Okay, how much am I going to lose? That should be a primary concern because this is a given. That's a given. You're going to trade. Okay, yeah, well, one of the comments is it depends on the setup. Yes, of course it depends on the setup, but when the setup is there, you're going to trade. So let me pull it to you this way. Let's say all of you guys have 100K in your account, okay? $100,000 are in your account, and you're not trading, okay? You're not trading right now. You're a real estate agent. Not a real estate agent. Sorry, you're in a position to go buy a house, okay? You're in a position to go buy a house. You got 100K in your account, and you're like, I know I have to buy a house. What's your next step if you know you have to buy a house? What's the next piece? Risk. It's risk. What's the best thing I can do to make sure I don't lose? But you know you have to buy a house, so stop trying to say, well, this house is good, this house is good, this house is good, this house is good. This is all generated by greed. It needs to be the other way around. It needs to be generated by fear a bit. Well, it's not about which house is good. Which house will I survive in? Which house is not 500% profit potential, but it's sitting next to a volcano? I mean, come on. Like, we don't want that house. Right? Do you guys understand that? Yeah, location. And the location aspect is exactly the same thing in trading. Timing. It's the location part. That's all it is. Let me guys show you guys a example of something like this. Okay? I'm going to show you guys a trade I did yesterday, and I'll walk you through the whole process in a bit. Give me a second here. Let me go to the elite community. How many of you guys are elite members? Any elite members in here? Okay, one. Okay. In 5 weeks? Okay, some of you guys are still waiting. Okay, David, welcome, David. Oh, I got your drink next to me. I'm drinking right now, David. Okay, so, all right, so let's take a look at this trade here. Initial trade that was activated yesterday. Okay, this is approximately 24 hours ago. Okay, the chart here says a day ago. I don't have the exact time, but I'll put it up on the screen for you guys. Okay, this spot right here on the 240, that's where I entered. Let me find that spot for you, which is voila, right there. Stop loss, something like that. Take profit was up there. Okay, shall we discuss this of what happened to this trade? This trade, did it go to my take profit? My take profit's the top part of that green line. Did it go up there? No. However, I was able to run away with that trade and pull out still $99 out of it. Small amount, I know, but I was able to pull out something from it. Now, it has a lot to do with risk to reward. It's not about how much can I lose, but if the trade doesn't work, do you have space to run away? You see, stop loss gives you that ability to understand that logic. Agree? Okay, let's go into this a little bit. I'm going to show you. I'm going to put it two trades side by side. I'm going to take a screenshot so you guys can see. Okay, we got the 4 hours and we got the 60. I'm going to take a screenshot now. Money spot, yeah, it has some to do with it. Okay, I move it over a little bit. Move this over a little bit. Okay. Here we go. Okay, everyone see the screenshot? I'm going to draw a circle right now. Circle? Yes. Good. This circle's famous. We're going to call this the Urban Forex Circle. Okay. So, all right. Now, let's take a look at this first on the left screen. The left screen, I have a 4-hour chart. Okay, the recording will be available either today, maximum tomorrow, but most likely today. You guys can give me a goal that, okay, since after the webinar, within 3 hours, I'll get it released to you guys. How many of you guys gonna hold me up to that? I'm gonna see if I can get you the recording within 3 hours. No, not 30 minutes, please. 3 hours. Okay, I'll try that. I have my team here with me today, so within 3 hours, we'll get it up and running for you guys. Okay, so We got the 4-hour charts right here. Okay, 240 minutes, which equals to 4 hours. Okay, and I'm looking at this chart based from the daily. I came in from the daily because I've been trading the daily 4 hours recently with my girlfriend and David. So I'm looking at the charts from a higher perspective. So from the daily, I saw this gap happen, and I'm like, okay, strong markets are busting through, which is like, okay, seems to be buyer's market, right? They're going up very, very hot. The next thing I'm doing is I'm looking at my techniques of price action, which is like, well, if the price is going up, I put myself in the shoes of, well, let's say everyone wants the house. So what happens to the price of the house if everyone wants the house? Prices rise. Okay, if prices are rising, and if they're rising very fast, if they're rising extremely fast, what does that mean? Yeah, bubble. No. Okay, if they're rising extremely fast, it means there's a demand. There's a lot of people willing to buy it, which means prices are gonna get expensive. Very, very expensive, right? If prices are gonna get expensive, do we want to buy it up here? No. We're sitting on the sidelines of, okay, buddy, give me a discount and I'll buy it. But I don't want just, okay, you see where the most problem comes in is the idea of, okay, give me a discount, I'll buy it. Oh, here's a discount, let me buy it. Right? Does everyone agree? Isn't that the mentality? But we don't take it a step further. We need to take it a step further of, once you get the discount, is the demand still there? Does that make sense? Is the demand still there? So we're looking for these two things. That is your timing. You're looking for that balance between, okay, I'm getting a discount, but are they flooring the discount? Where it's like discount after discount after discount. We're like, well, I guess it was a bubble. Okay, so let's get into this thing. So prices are coming down, getting you a discount, and you're watching this area. It's like, okay, it's coming down, but look at the speed it's coming down. I don't like that. Okay, stops here, messes around a little bit, chop, 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 and then some rising here. Rises hard. What? Interesting. Rises hard again. Okay, but why did the price drop so dramatically from here? That's something to concern ourselves with. Okay, just like we say the price has risen really, really hard. Okay, just like prices rise very, very aggressively, that means there must be a lot of buyers. But just like when prices drop so aggressively, there must be a lot of discount there. So what if there's a discount there again? I don't know. So what if as it's rising and I'm like, I don't trust it, it's going up, I don't trust it, it's going up, I don't trust it. Buy it, buy it, buy it, buy it, buy it. Am I gonna be safe? Burn the house. Am I gonna be safe? Yeah, it's too late, right? And let's talk about a little bit on the late before I get into the details. No one knows it's a buy because they're looking at it like that, like, oh, it's pulling down, lower low sequence, kind of like pulling, and everything is red, so it must be a down. When do they recognize it's a buy? Only beyond this stage, right? It's at that point they recognize it's a buy. So if it's at that point the public is buying, where do you think they're putting their stop losses? 20 pips? 30 pips? Money management? Recent low? What's the logic? Lowest low before? So can I say this low right here? That's too far, because that's the lowest low, but it doesn't gel psychologically. That doesn't, it's like, I can't, I'm risking too much to make a little bit of money. It doesn't make any sense. No, I'm not gonna do that. Okay, what about this low? Okay, so I'm entering here. Okay, I'm risking that much. Seems to be a little bit safer, but I don't know where I'm going. If I don't know where I'm going, how do I know how much is my risk? Right? So do you notice stop loss cannot be standalone? It needs to be accompanied with take profits. If you do not know where you're going, then how do you know what your risk is? Okay, so that's a question number one to, scratch your heads and be like, yeah, this brown guy is onto something. It's interesting what he's talking about. Okay, so let's take it from there and let's pace ourselves. Okay, now going forward, look at this after this area here when we have aggressive sellers here and we're starting to pull back again. Okay, evenly tanned guy. It's like, okay, so it's pulling back and then we see aggressive sellers again. Now, if you want to remove the word sellers and say discounts, that means why are they giving such a discount? What's going on? We don't like it. Okay, and then what happens after that discount? What do you see here? What do you guys see there? Okay, aggressive buyers pushing in. Okay. Step by step. We see some aggressive buyers. Okay. Aggressive buyers coming in. Are those buyers anywhere close to the discounts? Are they gobbling that up? No. We're still standing by. Then the next seller comes in. He's like, oh, aggressive too. Look at that. Look at it. He comes all the way down to here, very aggressive. But then what is this? What's that slowdown right there? Okay. This whole time, while you're getting discounts and stuff like that, always keep in mind, every time you get a discount, around this price, the people who want the house keep coming back and gobbling it up. But they're giving a lot of discount, less discount. Okay, after that less discount, what's happening here? Yeah, no lower low followed by boom. Very, very aggressive buyers were like, okay, I think I'm onto something. Looks like my buyers are coming back. Notice all this garbage I had to sit through. You see how timing plays a big role of you get in anywhere in there, you're not giving your chance to win, although you know that the direction might be a buy. Correct? Does everyone agree? Although if it ends up going higher high tomorrow or day after tomorrow, and you're like, I knew it was a buy, well, what's the point if you didn't make any money? Well, what's the point and if it goes in a buy after hitting your stop loss? And at the same time, we also think, well, if I put my stop loss down here and it does go in my way and I make some money, well, what's the point as well? And then psychology kicks in saying, what a waste of time. Does that make sense? So far, so good? So now our job is to get this little stop loss here to an area that's psychologically acceptable, but also at the same time telling us it's valid. That's when your risk comes into handy and saying, okay, you know what? Go for it. I will support you. Okay? Seems like hindsight? Well, I'm telling you, I was in this trade myself. You can look at any of our webinars. I post trades all the time. All the time. Okay? So far so good? Makes sense? Okay. Right after that, when the market comes in very, very aggressive here as a buy, I'm looking at it like, okay, I still don't believe it, which means one extra step. Saying I still don't believe it. It comes into this area where aggressive sellers came in, and I'm still expecting aggressive sellers to come back in. But what is this? Is that aggressive sellers or aggressive discounts? No. I'm actually looking at this now. I'm jumping over. I'm like, okay, I want to see the fine details of this. What's going on? And I'm watching it. It's like coming down, chop, coming down, chop, coming down again. And then same concept. Slow down here, followed by angry buyers. Aggressive buyers. It's like, okay, wait a minute now. With all these pieces put together, I had to wait through the whole process, but I also see my first higher low. Does that make sense? For those of you guys who cannot see the screen, you might have to exit and come back in. But is it still visible for most of you guys or all of you guys? Okay, good. Now, for those of you guys who are watching, now pay attention to this part. This part is very, very important. Okay, this part is very important. Now we're getting a first higher low, but remember that one thing I said. What is the public looking at this? The public is looking at this as this thing is a downtrend, which means sell, sell, sell. Correct? So it's not visible to the public. The public is looking at this as we need to sell this, the average trader. And you're looking at this like, well, sell it. I need some people to buy. You know, if I want to buy the house, I need someone to sell me the house. It's that simple. I can't buy, if I'm buying and Amr is buying and Elton is buying and Ahmed Radwan is buying and Vincent is buying, everyone's buying, well, who are we going to make money from? Who's selling it to us? No one. Okay, Ryan is buying. So if everyone is buying, well, who are we gonna make money from? Okay, so you want to think of that in that concept of in this process, what happens? So here yesterday, I hit the buy. Okay, I hit the buy. What do we do now? What's my stop loss? I put my stop loss below my recent low here, but why? Is it because that's just my recent low and the industry says put your stop loss below your recent low? Is it because it's 20 pips away? Yeah, it's because that's where the move up is beginning and that becomes our most logical point. Here's the next piece. Remember on the 4-hour chart where everyone kept hitting the sells? Where is that area? Here, here, here. If I draw a line across that area and say these are all the areas where they're hitting it from, okay? And if I buy it from here, am I away from the area where they keep hitting the sells from? Now keep in mind, if I'm doing a buy, the first thing I'm looking for is, okay, if I need to run away from my trade, if it doesn't work, because that is a possibility. This possibility no one looks at. They're like, once I'm in a trade, there's no way I'm going to lose. That doesn't happen. You need to come into terms with reality. There is a possibility that you can still lose. So if you take that into consideration, that if the trade is not going to work in my favor, can I run away? That idea of I am buying it as close to the bottom where all the buyers are hitting it from seems to be better. Okay, let me go into the main screen. Okay, can everyone see this screen? Is that better? Seems like a lot of people had the problem with the screen sharing. Okay, I guess this is okay. 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 Yeah, we'll just use this one then. And just my drawing is not going to be so good here. So, okay. Where were we? Let me put this onto a mouse. Here. Okay. So in this area, notice how there's buyers here. Oh, there's my mouse. Here, buyers here, buyers here, buyers here. Look at that on the 4 hours. Right here. Notice that area. And this is the area where sellers hit it, sellers hit it, sellers hit it. Now where I'm entering needs to be away from that in case the trade doesn't work. And that's what I mean by runaway. Ritz, your question, what do you mean by runaway? If the trade comes back at me, even though my trade started to work out in my favor, but then when he started to come back at me saying, oh no, we're coming in not slowly but aggressively, I can say I don't want this trade anymore. I don't believe the time is right now, because even as a professional trader, I can still be wrong in my timing, right? It's not like I'm God. I mean, I make, I can be off in my timing too, right? So, but I need to give myself that ability to run away from the trade and be like, I'll try again. I'll try again. But if you always enter the trade in an area where you cannot run away from the trade, then every try that you make is a loss after loss after loss. And then one time when you take profit, you're like, well, I just covered my loss. Then what's the point of trading? It's like I do 3 losses, 1 big win, but the win is covering my losses. So I'm in this constant cycle of I'm not getting anywhere. Right? Or I'll make 3 little winners and 1 big loss, and then back to square one. Yeah, it's just round and round and round. Like it's just a never-ending cycle. Okay? Now, can we use trailing stop? That's a very good question. I personally do not recommend trailing stops at all. Trailing stops is done mechanically. There is no logic, there is no thought process involved. We need to look at stops as a pure justification of our psychology put together with what the market is showing us and saying, okay, I'll allow this. Not, this looks good, I'll just put my stop loss below the most recent lowest thing that I see. We can't just do it like that every single time. We need to make sense of, is this a go? Okay? Yeah, okay, so here's another question. At what point do you, okay, so right when, okay, I'm going to clear all this up. Let me lock this. If I delete the rest, okay, I'll just put it back here. Okay, put the stop loss back. Okay. Okay, so at what point do I move my stop loss? Here's the thing. When the charts are starting to move in your favor, right here, when you get in and you're like, okay, you're going up, you're making 100, 200, 300, 400, 500, you're making money, and then at what point do you start getting stressed like, something's wrong? Is it when the price comes back to here? See, this is the major part where there's a big problem with a lot of the traders. When the trade goes into their favor, they become euphoric and think nothing can go wrong. When the trade comes down a bit, they think, it's okay. It's just a little pullback. What's the big deal? And then when the trade comes down till here, they're like, okay, yeah, I'm sure I need to get rid of this. Yeah, obviously, by that point, you're like bleeding. Okay? But why not in this area? Can you guys tell me why not in this area? Because this same thing happens to every single person. Is when you hit a buy, tell me honestly, do you guys ever see a sell coming? If you hit a buy, you only see the buy. You never see the sell. Any pullback doesn't look like a seller. It just looks like a temporary pullback. It's okay. It'll continue. You forget that there's a possible seller in the market. It's like it's only buys. There's no such thing as a seller. Right? So you get hijacked. Your brain gets hijacked. Now, when you can fix that and saying, okay, I can not get hijacked and look at it very, okay, Victor. Okay, when you can look at it very with an open mind, I started to notice this thing like, okay, this is an area where there's a problematic area where all the sellers hit it. But so is this area here. I know I'm away from it, but first try, nothing. Second try, wick on top. Third try, I'm like, okay, there's a problem here. First thing to do, stop loss 0. I don't want this trade to come against me. That's the absolute first thing we need to do, stop loss 0. Now, why are we putting the stop loss to 0? WWX, you keep asking where I'm from. Do you want me to put my passport on this webinar or something? I'm not sure what does it have to do with stop losses. Like, yeah, okay, I'm gonna go into it. My parents are in the U.S. I was born in India. I grew up in Korea. I hope this makes people a better trader because I need to tell you where I'm from. Like, no, come on. Let's just, forget stuff about me. I'm trying to teach you guys here something. We only have 1 hour. We only have 1 hour. Yeah, we're getting to the good part. So let's go here. Yeah, I'm based in Bangkok. Sorry to make this a joke, but Any personal question, just email me. It's okay. Naveen@urbanforex.com. That's okay. Anything you want to ask me, just email me. Okay? Yeah, let's not get distracted. Let's focus. Okay. All right. So here we go. Where were we last? Okay, we were saying this is a problematic area. Okay? Problematic area, right? Now, we have sellers hitting it from here. Sellers hitting it from here. I'm in the trade making profit, and in this area, I'm seeing problems again. I'm like, I'm not able to breach that area. It's tried 2 candles. It's already starting to get aggressive in that area, and I'm like, okay, I don't like the way this thing is looking. Stop loss 0, first stage. The next stage is, I can easily say, okay, well, my stop loss is 0, so where is my area? Here it is. My stop loss is 0, so I should just be able to walk away. Okay? It depends what kind of trader you are. If you're a trader who's investing, then yes, you walk away. If you're a trader who's watching the trade and you want to, make the most of it, then you have to unfortunately be there. Okay, in this process, markets are coming down, coming down, coming down. I was like, the way these sellers look, do they look weak at all or aggressive? Ryan, yes. Stop loss to 0 means back to 0. Where if the trade goes against you, you don't lose any money. That's your entry point. Okay, so yeah, all of you guys are saying aggressive. Now, if they're aggressive, that's a good sign. That means I need to get out of this trade ASAP. So here's a screenshot of the moment I exited the trade. Is when that red candle was coming down in my face, and I'm sweating blood at this stage, right? Okay, that's the moment where I hit the exit on this trade. It's like, I don't like the way that thing looks. If my buy is supposed to go, then what are the sellers doing here? That means the timing is not right yet. I gave it a shot. I gave my stop loss a chance, but I gave myself a winning chance, not a losing chance. Does that make sense? Okay, so I hope in this whole session you're starting to get the idea of your stop loss is not a risk control method, but it's actually a weapon that you use in your trading. Your take profit means nothing as much as your stop loss does. Your stop loss is hardcore. That's like, if he's good, I'm gonna survive. If he's not good, I'm not gonna survive. Does that make sense? Okay. All right. So moving forward, going further, I waited a little bit more, saw the market still holding in that area, and I'm like, okay, I'm gonna re-enter because I see my buyers coming back. However, now I'm entering at an area closer up to the top, right? It's like I'm back in that area where I'm entering. That's why I didn't put my stop loss just here, just below that guy. I put my stop loss lower in case this seller smacks me back down, pokes there, and comes back up. Because that's where everyone puts their stop loss, don't they? Just below the recent low. It's because now I'm entering at an area where I'm like, oh crap, I won't be able to run away from this one. That means my stop loss can't be below here because I'm buying right where sellers come in. That's the seller's area. So if I'm gonna start doing this, then my stop loss, my take profit's still at the top. Still at the top. Okay? So but this time, do you see, can I run away from this trade as easy as before? No. You see now, so now I'm going into pure risk. It's like, this trade better work, otherwise now it's gonna be a loss. Yeah, do you see now how this, even though you did all your homework and everything, but now you're looking at this as, now there's a risk, isn't there? Now there's a risk involved, which means you need to be more strict. Much more strict. Okay? You always have to adjust your lot size according to how much your stop loss is. Always. We'll cover that in one of the money management techniques or something like that in the webinar. Okay? All right. So let's take a look at this. So this was my re-entry. I'm going to show you here. 14 hours ago is where I re-entered it. The current price of the market is hovering around here. If I'm going to put the newest one, I entered right around there. Stop loss is down here. So you can see I'm in a slight profit, but I'm working with this nonsense right now. You guys see that? So that's my second trade running right now. It's live right now, and that's what I'm dealing with. I can't move it to 0 because I'm not in a space to move my stop loss to 0. Does that make sense? Yeah, stop loss is down here, right here. Okay, so your stop loss doesn't go with a rule-based set. Okay, stop loss always needs to be here. Okay, stop loss always needs to be there or below here. No, your stop loss needs to be based on logic. On logic, on room to breathe, on room to survive, on how you're trading. All of the stuff needs to be connected. Then out comes your stop loss. Does that make sense? Okay. Now, I'm gonna explain a couple more things here, because there's still, like I said, there's still a bit to cover. Now, ever notice you're in a trade, let's say when this trade right here is coming up very, very hard, and you're like, oh yeah, that's gonna be a buy, and you hit the buy there and you put your stop loss just below your recent low here. Okay, now trade slightly goes up in your favor, followed by instantly smack down, and while it's smacking down, we're in so much panic that there's no time to exit. We're like, stop loss. Does that make sense? So in this process, can we understand, wait, if my stop loss is supposed to be below my recent low, and then it just spiked me out, and then it went up, at this stage, what are we doing? What is the average trader doing at this stage? This game begins. Where do I point my finger? Is it the broker? Is it the news? Is it, what is it? It's none of that. It's actually none of that. It's actually a wrong read of the market. It's a wrong read of the market. Okay? Yeah, education. It has a lot to do with education. So let me show you guys one more thing here. And I have some very important announcements to make after this, so you know, watch out for. I'll talk about it in 5 minutes. It's some of you guys will be very, very happy. So announcements in 5 minutes. Okay. All right. So when we're looking at, for example, okay, I want you guys to focus on this area right there. Right there. Okay, I'm gonna try to see if I can bring that up on the 60 minutes as well. Where is it? Here. Okay, I want to put the same arrow on this side as well. Okay, focus on this area right here. Do you see from the struggle of the sellers here, suddenly the buyer kicks in very hard? Like very, very hard right here. It's like, wow, he's breaking above all the recent highs. It must not be a sell, it must be a buy. So what happens to the buy? If I hit the buy there, where is my stop loss? Below recent low. Okay, I'm going for the buy, my stop loss below my recent low. The buy works, but without me. Okay. Now, why does this thing happen? Why does that thing happen? I want you guys to pay very close attention to what I'm about to tell you now. Okay, this is something I know. It's not banks, it's not big boys, it's nothing. I'm going to show you something very, very unique. Okay, it's something I only teach in the course, but you guys are all here. You guys have taken time off, and you're due for some good information, right? So take a look here. According to the 4-hour chart, it looks like sellers are trying, buyers took it up. Yes? Everyone agree? You guys can see what I'm saying? Sellers try, buyer took it up. Watch here carefully on the 60. The more you zoom in to see, show me what happened. Here's your seller trying, aggressive or weak? Here's your seller trying, aggressive or weak? Now compare that to where the buyer comes in. Is he as aggressive or more? Okay, I want you to think about this thing. It took the seller 3 candles to get to this level. It took the buyers 6 candles to barely even reach 90% of that. Coincidence? The distance looks pretty big for the buyer. The distance means nothing as much as the details inside of it. Remember, if I do this, the markets are going down. Okay, all of you guys focus on this. Markets are going down. What are you guys thinking? What's the average trader thinking? Sell or buy? Sell, right? And then it does this. What are you thinking? Sell or buy? Sell. Okay, and then it does this. What are you thinking? Sell or buy? Okay, I'm gonna do this now. What are you thinking? Sell or buy? Sell. What are you thinking? Sell or buy? Okay. When it's choppy like this, it's not a panic. No choppiness causes panic in the market, but something aggressive will cause panic, which means people will jump the gun and click, 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 click. All the mouse buttons around the world are clicking. All right? All the lot sizes are being drained at that stage. Like, it's right when that emotion kicks in. So if you see the sellers, look at the emotions of the sellers. High emotions, and then, what is that? Look at that seller afterwards, high emotions. And then we get this, we're like, oh, okay, we got some big boys coming in here. Okay. Is it good enough for you? Maybe not. Maybe not, because we're still in very, very aggressive sellers mode. That's why you get spikes below. You see, because we can't enter in any of these stages. It's saying it's not ready yet. We cannot enter. And we can't just say, okay, well, there's a demand here. I'm just going to hit the demand there and put a box there and hit a buy. You know, no, it's not as simple and nonsense like that either. Okay, yeah, this one has no trade for me, unfortunately. I have to read this in a different format. Because this right here, what you're seeing, if all of you guys have gone through some course of mine, you will see this is a clear money spot. For these guys, that's a sell. For some guys, that's a buy. This is an important area, which means you need to understand this very clearly by doing some research of where is it going to go. And if it's a money spot, it's going to fight. And if it fights, expect spikes. Expect it. It's normal. It's not the broker. It's something that's normal. They don't want people to be part of this. Okay? Can you make a webinar on MoneySpot? Yeah, MoneySpot, if you sign up on our homepage, you know, after you get my, my story and stuff like that, you get MoneySpot video over there. If you're in the MPA course, the MoneySpot is there as well. So what I wanted to announce to you guys today. So here's a few things. How many of you guys said you guys are in the mastering price section here? Let me see if I can turn this off, and I'll turn on my screen sharing again. Sorry, my okay, so those of you guys who are in the mastering price section, you know, obviously we cover all the stuff. Okay, some of you guys are more advanced, like in 4CB and in the Elite. Okay, I want you guys to really put focus that stop losses is not as simple as it can seem on the outside. Like, okay, put your entry here, put your stop loss here, done. You know, send Naveen an email and you get a response in 2 seconds. It's not that simple. That's why I want to, oh, thank you. Someone said handsome. Oh. It's not that simple. You want to keep it a little bit more, no. It's still pretty full. Don't worry. So, you want to think about it like it's not as simple as just placing a line below your recent low. Okay? Does that make sense? Okay, now, the next thing I want to point out to you, the next big announcement is we are raising the prices for MPA next week. Okay, that's a major announcement. All the prices are being raised next week, and on next week, exactly 7 days from now at this time. Yeah, 7 days, right? 7 days from now on this time, the prices are gonna rise. 1 week from now, exactly at this time, there is a private webinar for MPA students. Private webinar for MPA students. I believe we're due for another one. We're gonna be going over some techniques, some some inside tricks. Obviously, we're gonna go into some of the stuff. So we're gonna cover a lot of stuff on the MPA. You guys look more excited than the people who don't have MPAs. So, okay, and I want to say, for those of you guys who don't know what is the MPA, it's what we call the Mastering Price Action course. It's a course that I designed for my one-on-one students. It's something that we initially priced at $6,000, but we did change it, and we are looking to raise prices. Right now, it's at $197. And we are looking to raise prices in exactly 1 week's time. In 7 days' time, prices are going up. So that one is going to be out of reach at this price going forward. Okay, I don't know how much it's going to increase. I believe it's going to increase anywhere between 30 to 100%, 30% to 100%, something in that range. So we'll see. I don't know who's dealing with that in the back end here. Okay, everything's going to go up. Yeah. Elite, 4CB, everything, they're all going up. They're all going up. Okay, supply and demand, same thing. So I just want to give you guys a heads up for those of you who do want to get it. You guys can pick it up. So again, 197 is going on for now. And let me move this thing. Let me get you guys the link for those of you who do not have it and want to get onto it. You guys want testimonials? For those of you who are in the MPA, how do you guys like the MPA? If you guys can share it with those who do not have it, I want, so that way I don't need to go out and show them testimonials. You guys can see it live. These are the real students here. Where is the links? Here we go. There we go. There's your link of MPA. I'm gonna open the thing for you guys. Here we go. So if you guys want to pick it up, you guys can pick it up. Where's my screen? Okay, here we are. You guys can pick it up here. So it's a 7-week course. I release it 1 week at a time, so that way you have enough time to digest the information. Armo is here, Lucille is here in the chat room as well, and they're here to assist you during your course. Any questions you have, they come out there like a hawk, assisting you instantly. So they're around. We're also available on social media. So if you have any questions, you guys can also reach out to us through social media, or also on email as well. So info@UrbanForex to get in touch with them. Naveen@UrbanForex to get in touch with me. And finally, if you guys want to get the MPA course, you have the link on your screen here. Okay. Yes, even on the weekends they're responding. Yeah, Jared. Yeah, I don't think they ever sleep. They're always on the emails. They're like, yeah, I got a customer is answering like, hey, you want to go grab a drink? No, I got emails. So I have to force them drinking. Social media. If you guys can put up the link for the social media, guys, please. There's 2 social medias we have. We have the Urban Forex page, which is more educational. Then we have the Naveen Prithiani page. Some of you guys recommended it, so we did it. which is more of lifestyle and mental aspects and stuff like that, and how we how I live my life based on forex trading and how I think, how I process stuff. So like a little bit of insights there. Okay. Some of you guys are asking Skrill payment. No, I believe we got that question last time. We don't do Skrill payment. I think we're only doing credit cards, PayPal, bank transfers, stuff like that. Black Tower office in Bangalore is closed. We only have our office now in Hong Kong. So, and I'm here personally in Bangkok or wherever I travel. Okay, so in Bangalore it's closed. Okay, are you lost? No, I keep traveling around. I'm not lost. Okay, so coming back to the topic we talked about today. Any questions on that? Any major question? Like, I need to ask him this question. What do you think? Ask me a question. Anything that comes to your mind about stop losses? Any doubts that you might have? Okay, we got another 5 minutes with us. Let's solve it. Okay, so where do we put the stop loss? Okay. Not so simple. Where do we put the stop loss? Now, well, stop loss still has a lot to do with everything that we talked about today. You can see it's not location. You can see it's not an amount. You can see it's not pips. It has a lot to do with how you're reading the market. If you're reading the market wrong, the stop loss will be wrong. Okay? How to mastering trailing stop loss. We don't do trailing stop loss, so there's going to be no topic on that. Naveen, any webinar on risk management? Enoch, I'll write it down so we can have one of those things coming up in the future. Okay, what is the benefit of using different time frame chart in the same pair? Tell us in short, please. Okay, Shahab, very good question. Different time frames is basically like looking at the universe below and above. So, for example, if you're buying, let's say on a 15-minute chart, let's say you and I were buying, right? So, Shahab, you're buying Euro USD, I'm buying Euro USD because the trend looks up. But then on a higher time frame, we see the big boys, they're looking at it like as a sell. And the closer we buy to them, they're going to hit the sell and we're going to be in a loss. So when you look at two time frames like that, you can know which is the party who's in the wrong direction. So if we're saying sell, we need to go to the lower time frame and saying, are they buying so we can sell it? Does that make sense? I hope that makes sense. Any basic rules to set up a stop loss? There's no basic rules, Loy. You have to look at the market in a whole. You have to use your education as the best as possible, and then your stop loss will make sense. Okay. Is it possible to have any payment plan for the 4 course bundle? I'm not sure if we have payment plans. Get in touch with Armo or Lucille. I think we did that for one person long time ago. I don't know if we still offer that or we allow that anymore. So I doubt it, but check with them. Okay, where we got? What's your option if trading view? What option if trading view do you suggest? Jimmy, I didn't understand your question. How do I get 4CB? 4CB is only available for MPA students who are actually doing, they've reached approximately 5 weeks into it, and then they have access to it, be able to pick up the 4CB. It's more advanced, you actually just need MPA to advance and actually stop the bleeding and possibly start turning a profit. But how much profit is basically saying you're going from a bachelor's degree suddenly up to a master's degree. And then the elite community is like, okay, PhD level. You're there, you're researching, you're with the community. We have a lot of fun, actually. Let me show you guys. Here we go. Show you guys the elite community. So in the elite community, you can see a lot of the traders come in. Just recently, a lot of people just came in here. They're very happy to be in here. Lots of new people coming in on a regular basis. It is the final stage, pretty much. And we're also catching up in person. One of the members are here in town, so we're visiting them. Here's David right here. He's here for his training. So we catch up in person as well. It's not just a name behind a screen. It makes it more interesting and more valuable if there's someone there, someone you can refer and put a face to, basically. Okay, For intraday, 2 time frames do you recommend? 60 minutes and 15 minutes. Too dangerous if you're not comfortable or you haven't had any experience trading. I would say 4 hours, 60. Okay, Dr. Rangasumani, are you doing fund management? No, we're not doing anything into fund management, but we are introducing a program into the future where we're going to be assisting the little guy, which means anyone going with something small, something similar to a fund management. We're trying to help someone earn as you learn program, where you will be able to copy my trades while still studying. So that's going to be something that we're going to release in the near future. Okay. Any webinar in commodities? No, nothing on commodities. Okay, at least not yet. Do it before World War III, please. Sure. I think that might be soon, considering how the political system is working. So, any webinars on lots? No, nothing yet on lots. Bitcoin? No, we're not going into Bitcoins quite yet, too. We're going into pure reading of the charts, Jimmy. So whether you use Bitcoins or some of you guys asked about commodities or futures, it's all similar. It's all very, very similar. You need to read the market in terms of logic of who's buying, who's selling, and when do I get in? Where do I fit into this picture of trading? If that's out of the balance, then it doesn't matter what you're trading. It's going to be all offset. Okay? So guys, that's all the time we have for today. We only had an hour together. I hope to see you guys in the Mastering Price Action course. And those of you guys who are in the course next week, 1 week from now, I will see you in a private webinar specifically for Mastering Price Action students. Thanks a lot, guys, for coming here. And it's always wonderful to see you guys. Cheers. Bye for now.